Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to uncover the real story. And today we're diving into a recent filing from Hudson Technologies Incorporated where some interesting adjustments to their borrowing and buyback plans are coming to light. So what is the big news here? Well, on the 25th of November of 2025, Hudson Technologies Company and Hudson Holdings Incorporated enter a Fourth Amendment to an amended and restated credit agreement. The key players here are the borrowers, which are these two companies, and Hudson Technologies Incorporated itself acting as a guarantor. They're dealing with Wells Fargo Bank National Association, acting as both the administrative agent and a lender in what is being called the Wells Fargo facility. Now, this amendment isn't some massive overhaul. It is more of a tweak to an existing arrangement. The most significant change is regarding stock repurchases. The company is now permitted to buy back its own stock under more defined limits. Specifically, they can repurchase up to $20 million worth of stock per calendar year in both 2025 and 2026. After that, the limit drops to $5 million annually for the rest of the facility's term. This is all conditional, of course, meaning they have to meet certain criteria before they can do these buybacks. There are also some other smaller technical changes made to the agreement. Following up on that, just a few days later on the 1st of December, the company issued a press release. This release essentially confirms the news about the shareholder repurchase program and clarifies the details. The board of directors has given the green light to increase the program, meaning they can now buy back an additional $30 million worth of their own shares. So they're increasing the limit for 2025 from 10 million to 20 million and authorizing another 20 million for buybacks in 2026. How exactly will they go about this? The company states they can make these purchases on a discretionary basis from time to time. This can happen through open market repurchases, which is pretty standard. They also might use what is called Rule 10b5 to 1 trading plans. These are prearranged plans that allow companies to buy back stock, even when they have sensitive information, as long as the plan is set up during an open window. When they don't possess material non-public information. Privately negotiated transactions are also on the table. Now, a lot of factors will influence how much they actually buy back and when. The stock price will be a big one, of course. Trading volume, market conditions, and regulatory requirements will all play a part. It is important to note that this repurchase program can be changed, suspended, or even stopped at any time without them needing to give any advance notice. And where is the money coming from for these buybacks? The filing mentions that these repurchases can be funded from the company's existing cash and cash equivalents, and also from its future cash flow. This suggests they feel financially stable enough to allocate these funds without jeopardizing day-to-day operations. Now, while this report gives us the summary, the actual legal document detailing this amendment is filed as Exhibit 10.1 to this report. This is where you'd find all the intricate legal wording of the Fourth Amendment to the amended and restated credit agreement. And as for the press release announcing the increased share repurchase program, that is available as Exhibit 99.1. So what does it all mean? On the surface, Hudson Technologies is signaling confidence. Increasing their stock repurchase authorization, especially when coupled with adjustments to their credit facility, suggests management believes their stock is undervalued, or they want to return more capital to shareholders. They're also managing their debt facility to accommodate these buybacks. Let's talk about what this looks like from a business perspective. Typically, a company increasing its buyback program means a few things. First, they believe they have enough cash and strong enough future cash flows to not only operate but also to buy back shares. This can be a positive signal to investors that the company is financially healthy and sees value in its own stock. It can also boost the stock price by reducing the number of shares outstanding, which can increase earnings per share. However, there are always risks. A company that buys back too much stock can sometimes find itself short on cash for crucial investments or acquisitions later on. The limit set here, 20 million per year for 2025 and 2026, and then dropping to 5 million suggest a carefully managed and phased approach. They are not going all in at once, which is prudent. Also, the fact that these buybacks are contingent on certain conditions means they are not a sure thing and depend on the company's performance and market conditions. Looking at the broader market for companies like Hudson Technologies, which operates in the air conditioning and refrigeration parts and service industry, their strategy here could be influenced by industry trends and competition. If they feel innovation or expansion is less of a priority right now, then returning cash to shareholders through buybacks makes strategic sense. Ultimately, this filing indicates Hudson Technologies is making strategic financial moves. They are adjusting their credit arrangements to allow for more shareholder-friendly actions, like stock buybacks. It shows an intent to manage their capital effectively and possibly to reward investors. The fact that they are being somewhat conservative with the buyback amounts indicates a balanced approach to capital allocation. They are not overextending themselves, but clearly signaling a positive outlook and a commitment to shareholder value. Alright, that is our breakdown of Hudson Technology's recent filing. What is your take on these financial adjustments, and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And don't forget to check out our Discord community linked in the description for more discussions and insights. Thanks for watching, see you next time.